Amit Kumar Gupta, founder of Fintrekk Capital, who joins us on the show. Good morning, Amit. Pleasure having you back here with us on News 9. We will come to the TCS results and potentially what could be adding to pessimism in IT stocks in just a bit. But overall, markets in a better mood today than what we saw yesterday. Was yesterday a case of immediate profit booking after the announcement of ceasefire? And are we seeing a little bit of buying on dips happening this morning?
Yeah, hi, good morning, Kartik. Thank you for having me. I think market is trying to price in how quickly we can see the traffic on the Strait of Horrors coming along. Currently, there is no traffic. I think less than five are happening, and Iran is saying around 10 to 15 vehicles on a per day basis. I think market is hoping that there can be a higher number to that. And we have to see, after this 2 week of negotiations, what number we finally gets into it. But just going by seeing the movement, etc. If crude comes under control and we see higher traffic on the SOH, then I think this buy on dips will get further momentum.
Stick to those oil prices and of course the entire flow of energy, and that is something which definitely impacts all energy producers, refiners as well as distributors. And I'm looking at the charts right now. BPCL and IOC both up about 0.85% or so in trade this morning. Hindustan Petroleum up about 1.3%. This despite the fact that oil prices continue to remain elevated and, like you mentioned, hardly any passage through the Strait of Hormuz. So why are we seeing some buying activity? Is it only sentimental sort of momentum that we are seeing on oil marketing companies this morning?
Yeah, I think it's more of a sentimental or a relief kind of a rally. OMCs can have tough quarter, given the how the oil prices would move in on the global markets. Plus, I think if government thinks that the fiscal is will get impacted, they might pass on the higher crude prices to the consumers after the elections is over. So we can see a little bit dent on the consumption also happening. So yeah, it's more like speculative buying at this point of time.
Right, speculative buying there. Meanwhile, I'm also looking at stocks of logistics, transportation companies as well as ports. And Indigo continues to remain up. In fact, Indigo was one of the major gainers after that ceasefire was announced. That stock was up almost 9% or so, if I remember correctly, 2 days back. This morning also, Indigo continues to trade in the green. Meanwhile, positive momentum, not as much buoyancy seen across the logistics and transportation stocks. Your view on this larger sector of mobility?
Yeah, see, logistics is quite impacted because of the higher crude prices. Not just March, but April is also impacted, and I think next 2 months will also be impacted as far as the crude prices are concerned. This ebb and flow during the ceasefire and volatile crude prices, that's going to challenge the investors to stay invested in logistic companies, because in the short term, the impact, especially in the Q1 earnings, will be quite high. Given that there are constraints in energy availability, there is a disruption in supply chains. And I think even in the coming quarter earning season, there will be a negative commentary on the demand challenges, on the input cost pressures, and the closures due to raw material energy shortage. They are in sort of a bother space for at least 1 or 2 quarters.
Okay, so 1 or 2 quarters are likely to be challenging for the transportation logistics companies, which are directly dependent on oil prices. Meanwhile, let's now shift focus to IT stocks and begin with TCS, which is, of course, one of the first to announce their quarterly earnings, and the Q4 results have shown substantial growth, one would argue. Revenue on a year-to-year basis is up almost 10%, 9.6% at over 70,000 crore rupees. Net profit also up in double digits on a year-on-year basis to about 13,700 crore rupees. rupees. That's up 12%, and the company has announced a dividend of about 31 rupees per share. But this morning, stocks not reacting too positively to news coming in from TCS earnings, and in fact, the entire IT sector seems to be down, despite the knock-on effect from US would have suggested that IT stocks should trade in the positive territory. Any fears that investors are seeing around TCS, Amit, despite the fact that there is a 31 rupee per share dividend announced on the basis of a 12% year-on-year growth seen in profits?
No, I think on a standalone basis, TCS results was as per the expectations. The Q4 revenue grew around 1.25% quarter on quarter. The international business was again, 1.5% up. EBITDA margins expanded. There was, they have reinvested some of the tailwinds back into increasing capabilities and growth engines in the AI. The deal wins were strong. In fact, there were 3 mega deals in the last quarter, which takes the total deal amount to about 40 billion in FY26 total. So I don't think the result was that an issue, but what we are seeing the commentary coming from the US outside, outside this market is that there are furthermore newer versions of Anthropic coming along, and this time it's going to hit a lot of accountants and tax entries which are happening.
Right.
There is a company called Intuit in the US,
Yeah.
which was down about 10% yesterday because it's tax filing season in the US, and a lot of people are using AI now to file taxes. So I think it's a sort of a cycle where every uptake or every version which comes in Anthropic, Cloud A, etc. That's going to impact negatively, and it will take 2-3 quarters to sort of assimilate how IT companies like TCS are actually benefiting from this Gen AI cycle.
Benefiting, or some would argue losing, but of course sticking to the theme of AI, I think all those fears around job losses, and remember TCS was among the biggest players when it came to axing employment roles across the company last year. We've seen Q4 add numbers to headcount. In fact, we've seen as much as almost 2,400 odd headcount additions to TCS in Q4 as compared to Q3, and the total headcount now stands at about 584,500 odd people. But the attrition rate, especially in top management, seems to be higher in Q4 than what we saw in Q3. So overall, this entire AI disruption story when it comes to job roles, we haven't really seen that after last year impact the IT sector as much, at least in the first 3 months of this year, Amit.
No, actually, the headcount for TCS actually rose by around 2,300 in Q4,
Exactly.
including some 750 plus with the deep advisory and consulting expertise. So I think it's just a role redefinition, I would say. In certain cases where the employees have been able to adapt to AI faster, they have been reassigned into different projects, or they are sort of elevated from their current roles. And what we are seeing is that there is a growth recovery expected in FY27 with these strong deal wins. So I don't think we should really look at the overall attrition number. That number may have come down in the last 1 year, but it's sort of adjustment. If the Gen AI cycle picks up, they do more deals. The vertical sees more growth revival, then the number of hiring will also go up.
All right, Amit. And what is your overall view? I understand that you're saying the next 3 quarters or so are going to be critical to understand where the IT sector is headed with all the disruptions that we are seeing with AI and beyond. But overall, how do you see a day like today when there is a massive correction in these quality stocks names, one would argue, HCL, Tech, Infosys and TCS? A good day for investors to cherry pick some of these names?
I think anyone who is getting into IT should at least look at 3 years perspective. I don't think anything major is expected in the next 1 or 2 quarters. The valuations have corrected definitely, so they are quite attractive from a from a 2-3 year perspective. But at that point of time, there is a threat of Gen AI, and we really don't know how the terminal values of these companies would end up going forward. So if anybody wants to invest, have at least a 3 year perspective, because they are still good companies to own, good dividend yield. You might get open market buyback if the SEBI consultation paper goes through. So there could be some upside, but keep the expectations low and have a time horizon of at least 3 years.
Right, so a time horizon of 3 years, because nothing really is going to move the needle in the next 1 quarter or so. With that, let's leave it at that for now. Thank you so much, Amit Kumar Gupta. As always, pleasure having you here with us on News9.